Hey everybody, Economic Ninja here. I hope you're doing great. I have this background up because I was trying to find the more appropriate one. And I wish that we had days like this all the time. Blue skies, calm seas, breeze in your face, and beautiful green foliage. And that's sort of like my metaphor for life, right? I wish it was like that. I wish life was great all the time. But quite frankly, it's not. In the last year and a half, we've been talking about economic cycles and how to prepare for this next downturn that we're already in. We started it in September of 2019 when the banks were too afraid to lend to each other and they spiked the interbank lending rate. And that led into 2 years of absolute chaos where we were all locked down and through the supply chain for a total loop. And it's going to get worse. And I wish I could sugarcoat this. And the reason why I'm talking about this is because I'm going to give you my thesis for what is about to happen over the next 6 months. Now, I put out a March warning video, and I filmed the video like on the 1st of March, 2nd of March, meant to get it out. I totally forgot. There was so much happening in the news. I didn't get it out to like the 6th or 7th. We're already seeing those events unfolding right now. We are seeing the price of oil exploding. Here in California, I live in the county with the most expensive fuel in the country. I just drove by a gas station on the way here and noticed it's about to hit $8 a gallon. Now, most people don't realize there are these little fluctuations where the price of oil might drop 10, 20 bucks tomorrow, right? You just never know. But then it also might spike up. But the facts are the long-term trend is up. The big boys, the big banks have said, expect $200 barrel of oil. That $200 barrel of oil is totally in play. Even though I'm in the most expensive area, I went to some of the cheaper areas this week, and even they're feeling the pinch. I was looking at gasoline at like $4.60 in a community where I'm used to seeing it last year, like around $1.80, $2. All right. So regardless of how much mine is and how low theirs is in comparison, they are feeling it severely. And that is going to wane on the economy, and especially it's going to create psychological issues in the average consumer. I was talking to my best friend on the way home, and we were talking about the effects of what happened in 2008, how it really hit people when the national average hit the mid $4 range, and it really affected a lot of people. To say that now is worse is an absolute, there's no words to explain this. And the reason why or describe this is because not only do you have fuel that's going up, and it is expected to go up much higher. I believe in the summer we're going to see much higher prices. But I believe, that coupled with inflation across the board in everything from auto prices, home prices, but food and energy prices, those are the two most important factors people need to realize. Now, you're probably saying, Ninja, why are you beating this dead horse? You've been talking about this for months. I'm going to give you my thesis over what's going to happen over the next 6 months. We'll see if I'm right. Now, first off, do not take any of this as financial advice or trading advice. And I'm not saying that just as the disclaimer. I really do mean that. It shocks me how many people will hear something, like hear a rumor or hear like a little bit of a truth. They won't dig deeper into that truth to unbury the root ball, right? Like they see the tree and they go, oh man, there's some truth, but they don't dig out the root ball to see exactly what it encompasses, how the tree's held up. They don't really have the nuts and bolts of that truth. And hopefully you guys are understanding what I'm saying. And they just run out and do something. All right. I believe that I talked about a crash. I believe we're going to see some really bad things in the economy in March. And I believe we're going to see some worse things coming up in the next couple of weeks. So we're not out of the woods yet. What I believe is this: the Federal Reserve is going to raise rates 1/4 of a point. 25 basis points, 1/4%. I believe that is going to be halted and turned around in the next, let's say 8 to 12 weeks. Because they're going to go from a hawkish stance where they are raising rates, right, to where they're going to they're going to go back to zero and start to stimulate the economy. And I'll tell you why. First off, they have to raise rates to save face. All right. They have to raise rates because they said they were going to do it. They got to do it. If they don't, they seem weak. Secondly, if they don't raise rates, then it's going to cause a panic where people go, oh my gosh, is it that bad? So at least if they raise rates, they have one proverbial bullet in the magazine, bullet in the chamber that they can actually fire later and reduce, okay, to give people the perception that things are going to be okay. But that is not going to fix this. All right. I want to be very clear. Every time the Federal Reserve raised interest rates in 2003 to 2005, they're putting a bullet in a magazine. Then they loaded that magazine, and as the economy started to crumble because it could not sustain, we have so much debt on our books, starting even back to 1980 till the early 2000s, that the interest rates could not be high for very long. All right. People could not borrow because inflation had been getting out of control. Right. We are now at the end of this scenario. Now, I talk about it all the time. There are amazing opportunities. I agree with that. But right now, they're loading their magazine. And in 2003, they were able to take the federal funds rate at a 25 basis points, or 0.25%, and they were able to get it to around 2.25%. That means they had multiple, do the math, 8 interest rate hikes incrementally in 25 basis points hikes. I'm pretty sure they're all equal if memory serves me right, until the Dow Jones took a header in October of 2018 till about Christmas Eve of 2018. Until then, they had to start firing the weapon and going lower at 25 basis points, lower at 25 basis points. And they kept doing that until eventually we were able to get back into that euphoric phase. But I want people to realize that's not real growth. Real growth in an economy comes when the savers benefit because they get an interest rate that hopefully, mostly in perception, it stays up with inflation. And it also, the economy is blessing the investors that are investing in new construction projects, new businesses, things like that, and they are thriving. Usually, throughout the last 100 years, that interest rate sits around between 6.5% and 9% interest rates. There is no way on this earth that we could survive economically at those rates. There is simply too much debt to service, and the employment is not strong enough to actually keep those bills getting paid. All right. So the facts are things are looking grim. Now, I believe that they're going to still raise rates, like I said, and then they're going to do an about face because of geopolitical issues. There's going to be something new that comes up. I hope it is not China in Taiwan. I hope it is not, but I don't know. But I do know that they're going to do an about face. And you're going to see the stock market melt up. When the stock market melts up, and think Venezuela, it didn't matter how fast and how hard the stock market went up. Inflation on food and gas and living expenses was going up at a higher rate. So when that happens, people are going to dive in because it's going to start going up. But also, there will be a panic to buy everyday items. All around the world, people and countries are going to be buying necessities. When that happens, it's going to get to a fever pitch where people cannot afford certain things, and they're going to stop spending, especially in food and travel and leisure, subscription. Like I said, that is going to fall off a cliff, and you're going to start seeing layoffs and companies downgrading their earnings. And even like when a company like Netflix, think about this, downgrades their forecast, their forecast for next quarter because so many people are canceling their subscriptions, it has a psychological effect on the stock market. So I believe around the September or the fall, we are going to see the melt up coming into the fall, and I believe we're going to see an epic crash. Now, guys, I want to preface this, and people will misquote me. I could be totally wrong. I'm wrong a lot. But I thought it's very important to tell you what I think, because let's say I'm wrong, but you sat back and you didn't get into any extra debt. You paid down your debt and you got yourself into a position to pounce on opportunities, whether that be storing up cash in your bank accounts, investing in things like gold and silver, Bitcoin, because you're hoping that they hedge inflation, which all throughout history, gold and silver have. All right. They're mostly late to the party because of the psychological effect the monetary metals have versus fiat, right? But it is the last thing everybody runs into, and it has this explosion blow off top. But if you're in a position where you're able to pounce, that is when you're going to have the most amazing time of your life. As a matter of fact, it's going to be very difficult to pick every opportunity. That is what's going to happen. And that is what I hope for Ninja Nation. I can't be more somber or more serious because I believe these are times are different. When I went out for a vacation with my family, or this my best friend and our boys this week to go watch the races, I was watching people, watching how they talk. It's that feeling you get. Something is about to burst, and it is absolutely blowing my mind. I felt this feeling, the hairs on the back of my neck were standing up in the summer of 2008, where I could not believe we were in the middle of the economy imploding and people couldn't get it. Well, now we're not only there, people get it, and you could tell they don't want to talk about it. Like I'll bring it up every once in a while. Just, I was sitting at a table last night with some people, total strangers, and I made a comment. I'm all, how's that economy doing? And just the, oh my gosh, and that feeling of like, they want to talk about it. They don't know how to talk about it, but it's like that feeling. Everyone has that. Usually that's before everybody runs to the door, runs the exits. And I think the Federal Reserve knows that. And actually, I know they know that. And so I believe we're going to see the fastest about face in the Federal Reserve's history, from going from a raising the interest rate stance, a hawkish stance, to an about face and slamming it back down. The last one in 2015 to 2018 only took the federal funds rate from 25% of, 25 basis points to 2.25%. And then they immediately about face within one quarter and we're sliding downwards. I think this interest rate hike cycle is going to go down in history as the absolute shortest lived interest rate hike cycle in history. So do with that what you may. That I wanted to put out as my thoughts of what's coming the next 6 months. Guys, there are amazing opportunities, but I want people that are hopefully watching this because you guys shared these videos for the first time to understand you need to do something. You need to do something now. So the first thing I would say is buy some extra food, buy some canned goods that will last you 90 days, possibly 6 months. It's very important. I think that if you buy a canned good today on sale, think smart, you have time over the next couple of weeks, that purchase will do better. It'll give you a higher rate of return than if you invest in the stock market right now. With that being said, guys, I thank you so much for watching. The Economic Ninja is out.